Another trading week is winding down right behind me here on Wall Street. A week that ushered in a brand new month and even more gains. In fact, Wall Street bouncing back in a big way this week as strong earnings from the combination of Microsoft and Meta platforms reignited AI optimism and powered a rally in chip stocks like Nvidia, helping the market focus on tech and brush off a third straight monthly loss and recession concerns. While touching on recession concerns, trade tensions lingered with little progress on China, but potential developments in India. Meanwhile, economic data remained mixed with a surprise GDP contraction and the lowest consumer confidence read in nearly 5 years, challenging upbeat jobs data that was much better than feared to close out the week. And this point on Friday, all three major benchmarks, believe it or not, up and on track for a second straight weekly win. The S&P 500 on pace to rise about 2.3% this week. The Dow Jones on track for a 2.5% advance. The Nasdaq up 2.7% week to date. But now we have ourselves a new week ahead. Will we see an extension of this rebound, or will recessionary fears return to dominating the headlines? There's a lot of data to decipher, so let's jump right into it and take a look at what will likely move the markets in the week ahead. Now, we first kick off on Monday. This Monday kicks off in the United States with 3-month and 6-month bill auctions, as well as ISM Services PMI, which for April is expected at 50.6. Tuesday sees us in Europe with the EU Composite and Services PMI reads, as well as the March EU Producer Price Index expected at negative 1.1% month over month. Wednesday kicks off our return to the U.S., and it's all about the Fed, the FOMC rate decision. That's on the docket at a rate that's penciled in to remain unchanged to 4.5%. And then on Thursday, we have even more rate decisions, this time out of the Bank of England. But the rate, this one, expected to drop to 4.25% from 4.5%. And then on Friday, besides Chinese import and exports figures for the month of April, we also have Canadian unemployment expectations calling for an unchanged read of 6.7%. Meanwhile, keep an eye on earnings and more geopolitics, which have been major market movers as of late. The combination of tech reports and tariff updates as well. And until next week, coming at you live from the New York Stock Exchange, I'm James Sweeney reporting for ICM.